Hey, what's going on, everybody? Welcome back to Bonafide Investing, where we talk all things high yield investing, as well as futures, options, and just investment goals in general. If you're new to the channel, welcome. To give you a little bit of background about what we're doing here, I have been experimenting with high yield strategies for about a year and a half to 2 years. And in that time, I have built what I call an all weather high yield portfolio that I call Cash Flow Life, that seeks to, number one, pay all my bills, helps me live out of my brokerage and free from 9 to 5, and also maintain and pay down my margin. I have deployed about 20 to 25% of my overall net worth. So again, I'm taking this strategy very seriously. And if it fails, then I'll try something new. If it succeeds, I will keep bringing more money into it. Please hit like and subscribe if you like what we're doing here at the channel. I would love to hear your comments, your feedback, maybe even what you're doing across your own portfolio. And please know this is not investment advice, not now, not ever. Even though I was a financial advisor before, I am not responsible for any of your wins and any of your losses. What I want to talk about today, I want to talk about just a portfolio update, where everything stands going into next week, and then give you some of my thoughts on next week. So right now, with share count and the most current income from each of these shares. So again, SGov all the way through YBTC. And I'll even include all of the puts and calls that I currently have as well in the option category. I include their values as well. So right now, the overall portfolio value, using my own principal as well as some margin, the total value is $633,903.64 invested. That is $465,753.82 of my own equity. That is 73.47% of the portfolio. And then I am using $168,149.82 of margin, which is 26.53%. That's at my higher end that I want to use. So I said before, I like to stay between 10 and 30% of my available margin. I don't think I'll be making many purchases in the coming week or anytime soon. Right now, the income generated on this strategy is $156,000.64 annualized. That is $3,000.01 per week. That is an overall portfolio yield of 24.6%. So overall, happy with the numbers. I like to see my portfolio yield right in that 25 to 30% range. It's at the bottom, but you know what? I think it's healthy. A lot of the round hill funds, QDTE, XDTE, RDTE, and even YBTC, they paid really high year-end distributions, some of them for 2 weeks straight. So the fact that they're yielding closer to that 18 to 21% range right now, I think it's prudent by management. I actually applaud it. I think it's healthy. So again, that $156,000 that the portfolio is yielding right now, I think that is at the lower range. And you got to remember too, volatility right now is low. And I think volatility here is going to tick up soon. So my margin buffer is a little over 60%. I really like that. I like to stay above 50% in my margin buffer. I like that added cushion. What am I doing right now to hedge? Well, I have a call on VXX. I think volatility will start picking up. And I've got my leaps puts on the Qs and SPY. That's my real crash protection if we should go into a severe market crash. I'm speculating on oil and energy. So you can see between BOIL, USO, XLE, and XOM, I think they will all have a good 2026. Who knows? But I think that they are so beaten down and finally showing some signs of life. Those are my speculation plays for the coming year. Wanted to talk a little bit about what I think is going to happen coming up this week. I think that we are potentially going to have a sell-off. I think volatility will return as soon as this coming week. Markets are closed on Monday for MLK Day, so I hope you're doing something fun with your family and or friends. But I think for a shortened week, we will see some volatility pick back up. I also think we could see a big break up or down in the SPY and NASDAQ. If I had to bet, I'm going to bet on a break down. I've said for a while, this is a very complacent market. It's been a frustrating market, to short. I don't try to short markets. I don't try to time markets. But did I open my puts too early? Absolutely. Do I care? Not really. I'd rather be early and buy when volatility is low than try to, start buying insurance on the portfolio when it becomes expensive. Okay. So I think when the markets do sell off and people do start buying puts, they're going to pay a lot more money for those puts. So just, again, I don't care if I'm early. I care more if I'm late to things. So again, if I'm a little early, that's okay. And if we don't have a severe market crash or correction, all the better, right? I can roll my puts later. I can let them expire worthless and open new ones. And my portfolio would keep gushing me cash to pay my bills and maintain my margin. So not a big deal. I think this week could be very interesting. There are some asset classes that I think might be prudent to maybe take a little profit if you've held them a long time. But I think that overall, it's good to stay diversified right now. And I think rates are going to start ticking higher. And what I mean by that is I think TLTW, I think it's going to have a rough next few months. And I'm fine with it. It doesn't bother me. I would much rather dollar cost average back into these at much lower prices. I am dollar cost averaging back into SGov all the way through consecutively back through IYRI. I'm not dollar cost averaging back into the last 5 holdings, but I am dollar cost averaging into these percentages across this portfolio to maintain the diversification as well as be mindful of inflation. And I really want to always buy income using margin. Okay. If I can borrow at 4.5% and yield, 25 to 30% on average, I like that spread across a diversified high yield portfolio. But I think TLTW could get hit pretty hard. Now, what I've liked about this ETF is that when it's gone down in the past, it actually came out right when rates started rising, right? Back in 21, 22. So right when inflation ticked up, rates and the long bonds got completely massacred. TLTW got hit really hard, but overall it has had a positive return since inception because of the nice distributions it pays. So if it goes down, I don't care. I'm going to be buying it lower, and I like the roughly 12% annualized distribution that it pays the portfolio, getting exposure to TLT, which owns 20 plus year US treasuries. SGov, I don't really need to comment it. It's just cash, right? It's going to pay me. It's the only holding I have that pays me just under what I pay in margin. I don't mind the 3.5 to 4% monthly, just to have that cash cushion and a buffer across the portfolio. WPay and YMAX, these are the two I wanted to talk about mainly. What I'm contemplating doing is if we do get a market sell-off next week, I think what I might do is my target allocation for the portfolio is 15% WPay, 5% YMAX. I might switch that. I might actually do 10% YMAX, 10% WPay as my ultra high yielders. Just because WPay is leveraged 1.2 to 1, whereas YMAX is 1 to 1. What I think I might do is sell some WPay, buy some YMAX with that, and just even them out across the portfolio. So that's one change I might make this week. And if I do, definitely make a video on it. The Qs, again, I like the exposure there. If they sell off, dollar cost averaging into them, I like buying them cheaper. Really been happy with QLDY. This pays twice a week, and it's had really little NAV erosion for what it's paid out since inception. Been very happy with QLDY. Got another dividend hitting on, I believe, Tuesday, since the markets are closed Monday. And then I did add, my biggest adds last week were I bought $10,000 of YBTC. I think I'd rather get my Bitcoin exposure directly through the covered call ETF that Roundhill has. Yes, I'm well aware of the risks and the give and takes, risk and return, whatever you want to call it. But I'd much rather get paid every week with Bitcoin exposure than owning Bitcoin directly right now. And then I did buy another 1,000 shares of YQQQ just to hedge any sort of correction we might see. And I did build a long short fund of my own using Ulti and Salty. I only put $10,000 into each in a 1-to-1 ratio. That's the first time I've owned them in a 1-to-1 ratio. I've owned Ulti twice in the past, Salty once. So I'll see what they do through 2026. I don't really care much to watch their share price every day. Yes, they will have massive NAV erosion. Don't care. but I want to see those, that roughly, 60 to 80% distribution between the two of them, maintain that margin for me throughout 2026. So some of my thoughts there. I think a pullback in gold is always a good thing. Gold is my favorite asset, but it's the one asset that I hope goes down. I know that sounds crazy, but remember, the higher gold goes, the worse your standard or cost of living goes down. So gold is, I think, the best barometer. After all, it is God's money, right? It is the best barometer for the economy, for inflation, for uncertainty. I think better than even the bond market. And I think the bond market is still far superior to the stock market when it comes to indications, charts, smartest people in the room. So again, gold, my favorite. It's the one I hope always goes down. Would love to see a sell-off. I think it would be healthy for it. But if we see $5,000 gold in 2026, it won't surprise me in the least. Small caps have had a run. Not always a good thing, especially if we're in a late cycle, which I think we are. So that just shows me that a lot of speculation might be back. And speaking of that, the CNN Fear and Greed Index is back into greed territory, and it spent most of last week in greed territory coming out of neutral. So I get cautious times like this. Again, need over greed. How much can I lose before how much can I make should be top of mind, right? How can I shield that? How can I protect my downside without giving up too much growth and too much yield, right? So we want to be mindful of that. QQQI, SPY-I, and IAUI, and IYRI. They all go ex-dividend this coming week on Wednesday. They pay on Friday, so I'll be getting those monthly distributions along with the other weekly distributions. So this should be a high income week for Cash Flow Life overall. So yeah, I think with low volatility, we see these, premiums fall. We're going to see distributions on a lot of these ETFs fall. No big deal. But again, we're at a VIX of about 15 or 16. Historically, the VIX doesn't go much lower than that for too long. And I think we're due for a massive spike. So we'll see. And I think it could come as early as this coming week. CRF doing its job, right? It's one I almost ignore. 5% of the portfolio. Robinhood does not drip at the NAV, even when I was told they did by a employee of Robinhood, which is a little frustrating on a chat. So I'm just going to take the distributions as cash. No big deal. This isn't a core holding. I know some of the channels out there, CRF and CLM are 20, 30, 40% of the portfolios. Yeah, you should be at E-Trade, right? If that's the case. But again, I'm here because nobody could beat Robinhood's margin rate for me, and I wanted to borrow as cheap as possible. And it's just not worth me going to E-Trade for that position right now, when a lot of the maintenance ratios are still higher at E-Trade as well. So anyways, happy with it. Love to hear your thoughts and comments. Maybe something you're doing. Please hit like and subscribe. Please support the channel. Hope you got something from today, and have a great day.